Hello, good morning. Welcome to another important time. We look at the world of business. It is Business 360, and my name is Blyden Kim. On Business 360 today, Nigerians are grumbling over double stamp duty charges by bank. We begin from there. Days after the new tax laws took off, Nigerians are decrying what are called double stamp duty charges by banks since January 1st, 2026. Nigerian banks began in January the collection of 50 naira stamp duties charged on senders of 10,000 naira and above. Consumers across financial institutions in Nigeria receive emails from their banks, respectively, to effect the uniform 50 naira stamp duty charge as part of the new tax laws. However, less than 2 weeks after the implementation, several Nigerians are crying out that their accounts have been overcharged. Several bank customers complain that they are being charged 100 naira per 10,000 naira transfer as opposed to 50 naira. From October 2024, when the Nigerian National Assembly received the tax laws, to June 2025, when President Bola Ahmed Tinubu signed them, to the present date, the tax reforms have been faced with multiple controversies. The latest was alleged errors and gaps spotted by KPMG. However, the Nigerian government dismissed doubts regarding the tax laws. Still in Nigeria, at least 5 electricity distribution companies supplied a disproportionate share of power to less commercially viable and poorly accounted feeders in the third quarter of 2025, according to the latest industry performance report released by the Nigerian Electricity Regulatory Commission (NEC). The affected discos, Benin, Kaduna, Ibadan, Yola, and Port Harcourt, recorded significant negative variances between their billing efficiency and energy accounting efficiency, a key regulatory metric used to track how electricity is allocated across customer bands under the multi-year tariff order. This imbalance resulted in electricity distribution companies losing an estimated 147.92 billion naira to billing inefficiencies in the third quarter of 2025. In its third quarter 2025 Nigerian Electricity Supply Industry Report, NEC explained that under the NYTO framework, electricity is expected to be allocated fairly across customer bands A to E, while maintaining consistent accounting efficiency. Where this occurs, the variance between billing efficiency and energy accounting efficiency should remain within the plus or minus 2 percentage point tolerance limits. NEC added that only just Disco met the benchmark, recording a variance of positive 1.71 percentage points, indicating balanced energy allocation and consistent accounting efficiency across its feeders. 5 other discos recorded significant positive variances, suggesting that electricity supply was skewed towards commercially viable feeders and high-paying customers. These included Ikeja at 7.52 percentage point, Abuja Disco 7.39 percentage point, Eko Disco 10.13 percentage point, Enugu Disco 9.35 percentage point, and Kano Disco 12.69 percentage point. Still in Nigeria, the Nigerian Customs Service has announced the commencement of a new standard operating procedure for regulating courier companies operating under the delivered duty paid Incoterm. In a statement, the National Public Relations Officer of the service, Abdullahi Maiwada, a Deputy Controller of Custom, explained that the implementation provides a unified framework for registration, manifest, submission, declaration, valuation, clearance, delivery, and compliance monitoring in line with global best practices. According to him, under the newly commenced procedure, courier companies intending to operate under the DDP regime are required to obtain a license from the NCS Headquarters License and Permit Unit under the Tariff and Trade Department. They are expected to submit all mandatory documents including Corporate Affairs Commission registration papers, valid courier licenses, compliance bonds, and a formal application to operate under DDP, Mawada explained. According to him, all licensed operators are required to submit an advanced electronic manifest 24 hours before shipment arrives. Meanwhile, 3 banks majors are anticipated early this year as lenders scramble to comply with the Central Bank of Nigeria's new minimum capital requirement before the 31st March 2026 recapitalization deadline. This projection was made by the rating firm DataPro in its 2026 banking sector prospect in Nigeria, as it also highlighted some of the threats to the sector. By the end of 2025, most Tier 1 institutes had already met the new capital threshold, and more have announced that they have met the target MCLR in this new year, leaving smaller banks under mounting regulatory and market pressure to shore up their balance sheets. Analyzing the banking sector prospects for 2026, DataPro's in-house expert and analyst on enterprise risk management, Idris Shitu, posited, and I quote, "And by the end of 2025, major banks will have successfully met the minimum capital threshold required by the Central Bank of Nigeria. Meanwhile, Tier 2 banks are under increasing pressure to comply with 3 significant measures expected by early 2026 as institutions scramble to meet the deadline." Meanwhile, Nigeria Bureau of Statistics December inflation adjustment has sparked credible concerns. The National Bureau of Statistics has said that it would normalize Nigeria's inflation data for December 2025 over a projected spike in last month's consumer price index. This was disclosed during a virtual stakeholder engagement convened by the NBS and the Nigerian Economic Summit Group on Monday, with the former explaining that the expected spike in inflation is driven by technical base effects linked to the recent rebasing of the inflation series rather than changes in economic fundamentals. Multiple analysts have projected a spike in the headline inflation for December on the back of base effects. Projection range from 31.4% to 32.4% year-on-year. Providing the official position of the Bureau Statistician General of the Federation and Chief Executive Officer of NBS, Adeyemi Adeniran, explained that the projected December spike stems from the rebasing of the Consumer Price Index, which adopted 2024 as a new base year after a 15-year gap from the previous 2009 base. He emphasized that base effects are a common feature of statistical practice, particularly in index-based measurements. Meanwhile, the federal government has launched a new Federal Government of Nigeria savings bond offer targeting retail investors with competitive interest rates and low entry requirements according to the document released by the Debt Management Office on Monday. The offer issued on behalf of the federal government pursuant to the Debt Management Office Establishment Act 2003, Registered Stock and Securities Act, is aimed at encouraging savings among Nigerians while providing a safe investment option backed by the sovereign guarantee. While stakeholders in the Nigerian capital market have expressed optimism over the acquisition of majority shareholding in Gerego Power PLC and by MAAM Energy Limited, MAM Energy, are saying the development brightens the future of the company. They stated that though MAM Energy, an Abuja-based integrated energy company engaging in electricity generation and supply, energy trading and marketing, has maintained low public profile, its ability to galvanize consortium of institutional financiers to close one of the country's biggest private equity deals. The equity deals was an indication of the new investor capacity. Gerego Power, which was acquired in 2013, is one of Nigeria's leading gencos using gas turbine as a clean energy source to generate power. By the third quarter ended September 30, 2025, Gerego Power recorded total revenue of 131.47 billion naira, with pre- and post-tax profit of 37.46 billion naira and 25.1 billion naira respectively. Earnings per share was thus at 10 naira or 4 kobo by third quarter of 2025. Total assets, meanwhile, stood at 273.15 billion naira by September 2025 as against 243.47 billion naira recorded by December 2024. In a regulatory filing at the Nigerian Exchange, NGX, the board of Geregu Power stated that the company's majority shareholders, Amperian Power Distribution Company Limited, owned by Lagos billionaire businessman Femi Achadola, had undergone a restructuring of its ownership following a share sale and acquisition concluded on December 29, 2025. As a result of the transaction, MAAM Energy Limited acquired 95% equity interest in Amperian Power Distribution Company, and thus the indirect controlling interest in Geregu Power previously held by Galvados Global Services Limited and Otedola was transferred to the energy firm. While the transaction did not involve the direct sale or transfer of shares of Geregu Power, the change in the ownership of the company's majority shareholder resulted in a change in the ultimate beneficial ownership of 77% of Geregu Power's issued share capital. The transaction was reportedly valued at $750 million or about 1.1 trillion naira. The acquisition was financed by a consortium of Nigerian banks with Backbase Capital as the financial advisor. Interesting times for the electricity sector and energy sectors, talking about the Genco stare. But now we'll go on a quick break, and when we're back, Business 360 continues looking at the markets. Don't go anywhere. Welcome back. It's your Business 360, and my name is Vladimir Kim. Looking at the market as oil rises after U.S. imposes tariff on Iran's allies. WTI crude oil futures rose to around $59.8 per barrel today, the highest in more than a month after U.S. President Donald Trump announced new tariff on Iran's trading partners. Trump on Monday said he would impose 25% tariff on goods from any nation that does business with Iran, intensifying pressure on the country amid widespread domestic protests. Trump said the measure would be effective immediately, but did not provide further details. Apart from the new tariff, Trump has also warned of possible military action against Iran, fearing concerns of a potential disruption to oil supplies from one of the world's largest producers. Supply worries were compounded elsewhere. Kazakhstan output is facing challenges from adverse weather, maintenance work, and damage to Russian infrastructure caused by Ukrainian strikes. These factors have counterbalanced expectations of increased crude supply from Venezuela's anticipated return to exports. And now to the markets, the energy market first. Afterwards, we'll look at the state of the metal and agricultural commodities. The energy commodities. Energy commodities indicate the price of crude oil at $60 per barrel, a gain in 1.012 points, a gain of 1.7% this morning. Brent, which represents Nigeria's price benchmark, at $64 per barrel, upward by 1.07 points, a 1.68% appreciation. Natural gas falling slightly, gasoline, heating oil, coal, all of mixed fortune. Now to the metal market. Metal commodities begin with the price of gold standing at $4,589 per ounce, downward by 9.22 points, a negative 0.2%. Silver price, on the other hand, standing at $85 per ounce, gaining 0.59% this morning. Copper price also gaining but slightly. Steel price at 3,132 Chinese yuan per ton, upward by 1 point. No significant change in the market this morning, but lithium gaining 4.93% this morning. Now to agricultural markets. Agricultural commodities begins with the price of soybeans at $1,029 per bushel. A soybean falling 3.49 points, a negative 0.34%. Wheat price at $509 per bushel, dropping 1.39 points, a negative 0.27%. Lumber price upward by 1.22%. Palm oil price at 4,040 Malaysian ringgit per ton, falling by 51 points, a negative 1.25%. Still looking at the markets, and now to the financial market as dollar stabilizes ahead of key inflation data. The dollar index steadied near 99 today after coming under pressure in the previous session as investors awaited the latest consumer inflation report for clues and cues on the Federal Reserve policy path. Markets are pricing in 2 Fed rate cuts this year, starting in June, although any upside surprise in inflation could limit the central bank's room to ease. Last week, non-farm payrolls report showed job growth came in below forecast for December, reinforcing a more dovish outlook for Fed policy. Investors are also awaiting a U.S. Supreme Court ruling on the legality of President Donald Trump's tariff policies, with a decision expected on Wednesday. Meanwhile, the dollar weakened on Monday after federal prosecutors threatened to indict Fed Chair Jerome Powell over his testimony to Congress on a building renovation project, heightening concerns about the central bank's independence. To the market, the Euro-USD market first, afterwards the state of the Naira and the cryptocurrency, the Euro against the US dollar. Euro against the US dollar price level stands at 1.16 US dollar to 1 euro. The euro gaining just slightly, but volatility is quite low in this market at 0.04% appreciation. A pound against the US dollar price level stands at 1.34 point mark, at 1.34 US dollar to 1 pound. A pound gaining 0.16%, volatility quite low in the market. Quickly, let's look at the states of the Naira, the US dollar against the Naira. A US dollar against Naira price level stands at 1,423 Naira, equaling 1 US dollar. The dollar falling negative 1.07 points against the Naira, a negative 0.08%. The Naira doing better than the dollar, but just slightly this morning. The euro against the Naira, 1,660 Naira, equaling 1 euro. A euro downward 0.7675 points, a negative 0.05%. The pound at 1,918 Naira, equaling 1 pound. The pound gaining by 0.05%, just slightly. Volatility has been a concern in today's markets. To the cryptocurrency market, let's see what the digital coins are doing. The crypto market. Crypto market begins with the price of Bitcoin at $92,258 US dollars. Bitcoin gaining 1,097 points this morning after recent falls. A 1.2% appreciation. Ether at 3,134 US dollar for 1 Ether. Ether gaining 42 points, a 1.38% appreciation. And Binance on a positive. Cardano, Solana, Ripples all gaining. But volatility, not too much, apart from Bitcoin gaining the most. Still in the context of the market, let's go to the stock market, the equity market, beginning with European markets at the head for higher open. European equities were set to open higher today, extending gains towards record high as attractive valuation and optimism over earnings and regional growth lifted sentiments. Investors largely looked past geopolitical risks and concerns over Fed independence, focusing instead on upcoming data. Euro Stock 50 and Stock 600 futures rose 0.3% and 0.2% respectively. Meanwhile, Japanese shares rally on snap election bets. The Nikkei 225 rallied 3.1% to close at 53,549 points, while the broader Topix index jumped 2.41% to 3,599 today, pushing Japanese equities to fresh all-time highs amid speculation that Prime Minister Sene Takachi could call a snap election as soon as next month. Takachi is widely expected to leverage her strong public approval to advance expansionary fiscal policies, improving the country's growth outlook. More attractive valuation alongside expectations of solid earnings and economic expansion continued to draw in foreign investors. Technology stocks led the rally with sharp gains in Advantage 8.5%, SoftBank Group 4.3%, Tokyo Electron 8.2%, Lasatec 8.9%, and Kyosia Holdings 7.8%. Other heavyweight names also climbed, including Mitsubishi UFJ 5.3%, Mitsubishi Heavy Industries 4.9%, and Toyota Motors 7.5%. And now let's look at global company stocks then. The price of other global companies. Apple first. The price level is $260 per share, gaining 0.85 points, 0.33% appreciation. Tesla also gaining, but not with significant change. Microsoft falling this morning. Amazon, Meta falling. Nvidia at a price level of $185 per share, gaining 0.25% this morning, and Visa are falling this morning. Other currencies, rather not currencies, other companies like Oracle, $204 per share, falling negative 0.33%. JP Morgan also dropping negative 1.43%. J&J gaining 2.61%. ExxonMobil falling a negative 0.47%. A bit back home to Nigeria, as we set to close, Nigerian stock market gained 745 billion naira. The Nigerian stock market began the week on a strong note on Monday, with investors recording a gain of 745 billion naira as equities extended their bullish momentum. A Nigerian Exchange Limited capitalization rose by 0.58% to close at 104.52 trillion naira, up from 108.78 trillion naira recorded at the previous session, reflecting renewed appetite for equities across key sectors. The rally was driven by sustained demand for stocks including eTranzact, Red Star Express, Mark Nicholas, RT Briscoe, Deep Capital Management alongside 45 other advancing equities. Similarly, the All-Share Index appreciated by 946.61 points, or 0.58%, to settle at 163,244.69, compared with 162,298.08 at the close of the previous trading session. Market breadth closed firmly positive with 50 gainers, outweighing 20 losers, underscoring broad-based investor optimism. And eTranzact, Red Star Express, Mark Nicholas, RT Briscoe, and Deep Capital Management led the gainers stable, each advancing and by the maximum 10%. On the losing side, Champions Brewery stopped the decliners, shedding 8.51% to close at 15 naira 5 kobo per share. Sovereign Trust Insurance recorded the highest trading volume with 307.47 million shares exchanged, accounting for 26.75% of total volume. Fidelity Bank led in value terms with transaction worth 3.14 billion naira, representing 16.32% of total market value. Well, it's basically what the market is all about, the ups and downs that comes with it, top gainers, top losers. And from all the market, most importantly, energy market, the volatility seemed low, even with the crypto market. We're looking forward to what the week will bring, but here we draw the curtain on today's edition of Business 360. Thank you for being a part of it. My name is Blyden Ukem. Thank you for watching.